Yes, yes, yes. Blocks to bags. We are back with another episode of Money Matrix. I am joined with our block reporter, very special guest. You've seen him here before. Mickey, what's up?
What's going on, Seb? What's going on? How you doing?
I'm doing all good. I'm doing all good. I'm excited for today's episode.
Me too, me too. I feel like we've got so much to talk about, huh?
Yes, and to dive straight into it, today's episode is a very special one. We are talking about VC, venture capital. Fresh off my own venture capital firm raising 300 million euros
Whoop,
and
whoop.
also announcing my promotion as head of digital marketing. Check on LinkedIn for that soon. We thought let's do a deep dive. Yeah, what is venture capital? How do you raise 300 mil? What do you even spend 300 mil on? Let's talk
Amazing.
about it.
First of all, big up, congrats. Come on.
I would like to take
Come
a lot.
on.
I'd like to take a
Come
lot of the
on.
credit. I can't take too much
Come
credit.
on.
I can't take too much credit, but I can't lie. I did play my part in helping them raise the fund. So for those that don't know, I work for Notion Capital, which is a European SaaS. SaaS stands for Software as a Service investment sort of fund. We're kind of changing the terms now to kind of align it more with, broader terminology. So we're calling it business software now because the world of business and software has just become like so wide and there's like different models. But, it was good. It took around 3 years or so to raise this fund.
To raise what, 300 million?
300 million euros. Tough economic
but also,
conditions as well.
What's your first? But wait, before we
Okay.
go into even
Yeah,
the fund, wait, tell us about your promotion. What's the new role?
So the new role is head of digital marketing. This is actually a dream role and something that I had envisaged when I was looking to break into venture capital. I said, how cool would it be to be head of digital marketing for a VC fund one day?
Mad.
Lo and
Mad.
behold, I'm here.
Made it happen. Made it
Yeah,
happen.
definitely.
And so with that, you guys also raised 300 million, right?
Yes.
That's the fund you just announced.
Fund 5.
What does that mean? What does we raised 300 million as a VC fund mean, right? So
Yeah.
I feel like we talk a lot about venture capital.
Yeah.
And the thing about that VC that's interesting is there's like a lot of, when you think about finance, there's there's banking, there's payments, and then the rest of finance is fairly abstract, right? People don't really engage with it that much. But VC is, if you think about it, it's a very kind of complex technical thing, but it's also quite like in the mainstream now. We talk a lot about VC.
Yeah, I mean, we're seeing the explosion of apps, The last 10, 20 years have been defined by technology companies pretty much, I don't know, I'd say taking over the world. You got Uber. We rely on Uber, delivery, even groceries now. I'm not going to lie. I don't even really
Software
grocery shopping. I get delivered. It has.
It's not
Famous
eating the
quote.
world,
It
right?
has
It's
eaten
eating
the world.
right? Alright. So within that, though, venture capital, we know companies, startups raise money from VCs. So you guys have just raised the fund.
Yeah.
So what does that mean? How does that contextualize
Okay, cool.
that?
So let's contextualize this. All right. So we're talking about raising money for your kind of business. Let's say you're an Uber, or let's actually use even a crazier app, Instagram. So when Instagram first started, it was a photo sharing app. So imagine the founders trying to get money to build their business. You can try and go to the bank and say, hey, I've got this crazy idea where I envisage people sharing photos on their phone one day. Bear in mind, no one does this at the current moment. It's not a thing.
Existed, yeah.
Can you give me like $1 million? The idea might succeed, it might fail. I'm not too sure, but you kind of have to trust me. Of course, the bank is gonna say no.
Yeah.
It's too risky. That's not really how banks work. You don't really have much leverage to kind of give them. So, cause banks don't usually fund such risky ventures like that, I would go to a VC fund.
Yeah.
VC funds, unlike banks, are pretty much custom built institutions to invest in founders, and I would even say risk. The risk profile and risk appetite for VCs is like very high. It's a very different model.
It has to be, right?
It has to be. It has to be. And it's a very different model to other sort of financial institutions. We've talked about loads of different financial institutions and Money Matrix. Just go to our YouTube and check out like the first and second episode if you want to know more about like central banks and different kind of large financial institutions. VC, I would say, is quite plays quite a small role in the overall global capital allocation of funds. But that being said, in my opinion, it's had the most impact on society, culture, and even financial markets.
Yeah, I think that's pretty fair to say. But and to go to it, right? So I think that was important. VC's got a super high kind of risk profile.
Yeah.
But where does it
They-
to the money, right?
Yeah.
When you raise 300 kind of million
Yeah.
dollars or pounds, whatever you guys raised,
Euros.
euros,
Ching.
there you're right in the middle. Where does that money come from?
Okay, cool. I'll break it down. I'll break it down.
Who do you get it from?
You know what? I kind of asked this question as well when I first went into the VC fund.
Yeah, and you don't have to tell us that.
No, I won't say it
Notion,
specifically,
right?
but
like just in
yeah, no.
general.
To be honest with you, to keep it real, you would think that there's a proper structure and these official people invest. I wouldn't say anyone, but you can be a very rich individual. You can be a financial institution. You can be an entrepreneur that has kind of like sold their business or sold some shares in their business. Anyone that has money really and truly can be an investor. Anyone that has money, access, and networks can be an investor within the VC fund. So let's say, and quite an interesting thing that I learned as well is that our fund was oversubscribed. We had a hard cap of 300 million euros and we couldn't raise any more. So there's more people that wanted to put in money, but we had to say no to them. Why is that? Because when you actually raise a fund, you do it with a mandate. You tell the people, cool, this is exactly how much we need. You do the maths, the financial modeling around it. With 300 million, we're going to invest it in, 20, 30, 40 different companies. We're going to take a certain percentage stake of the company's shares or equity. Let's say, for example, if we take like a 10% equity stake in a company, and the company is valued, let's say we invest at the company when they're valued at like 10 mil. Well, let's say you invest like 1 million. If the valuation goes up to 100 mil, then that 1 million 10x is essentially, right?
Yeah.
So that's essentially like the fund mathematics. You raise a large sum of money and over like, it's usually like a 10-year period. You're saying, I'm going to invest that 300 million. Well, it's not exactly 300 million. We're going to break down where the actual fees and what amount of it actually gets invested. But to put it simply, you have like a 10-year cycle. You have 300 million. And like the idea is that you're supposed to invest all of that money into what you've kind of set out to invest it in. So even if we wanted to actually raise more money, we couldn't because we've already set our thesis. You've already gone to the regulators and told them, listen, because if you didn't do that, then people will start raising like loads and loads of money and start spending it like willy-nilly without a sort of mandate, and it might mess up the market a little bit.
Yeah, and I think that's like a few things, right? Like you've got the people who you're gonna raise the money from.
Yeah,
and that's tied. I think that's gonna be tied to your thesis as an investment.
That's true.
Vehicle,
That
right?
is true. That is true.
Because one, I think generally, if like the people who invest in venture capital, you're gonna be ultra high net worth as an individual, but I think that's very rare still.
Yeah.
Still gonna make a fairly small proportion, right, of like the overall fund.
Yeah.
But you're gonna have university endowments, pension
I
funds,
mean,
right?
I've heard Harvard has the biggest in the university endowment in the world.
Exactly. So university. So essentially, what you have is universities or pensions, for instance. They have huge amounts of money. Everyone pays into a pension,
Like
right?
a ridiculous. Like if you look at the numbers, you would actually be so shocked at how big these endowment funds are.
Exactly. And to think about pensions, because we talked about pensions before, for instance, right? Everyone pays into a pension, and there's a huge amount that gets paid, and essentially that money has to be paid at some point. And that money is locked, however, for a very long time, right? Like pensions in the UK, I think It's probably what you can't access it without any kind of penalty before you're in
Yeah,
your
the money
60s,
is really locked up in there.
right? But what that means is the horizon for that money is that money could be locked up for 10, 20, 30 years, right? Essentially. And same with university endowments, with any kind of large amount of money that's in some type of long-term kind of
Vehicle or whatever you
vehicle
want to
that
call it.
pays out, right, over a long horizon, right? They're always kind of, it makes sense, right? And that, I think they tend to be quite a big.
They are.
They're
No,
like
no,
the
you're right.
biggest, right?
You are literally correct because they're looking to put their money into things that are gonna make the money, and they've got like a 50-year time horizon, isn't it?
Exactly,
Like they
and so
come.
like think about, like, to go back to the Instagram example, right?
Yeah,
I don't how much did Facebook buy Instagram
a
for?
billion.
A billion, right? So a billion. I think when Instagram got acquired, I think at that point, I think maybe they had like 12 people, maybe.
Yeah,
It was
it was definitely like a small. I think eight to 12 people.
it was really tiny,
yeah.
right? And um they were launched in what, 2010, October 2010, I think it was launched.
We'll check it, but
Right, but
continue.
like that, if you had invested in Instagram from say early to the end of that kind of that period,
Period.
that until it exited, right? Probably made, I don't know, 100x probably easily.
Yeah, you.
And I think the most famous one is obviously SoftBank with Alibaba,
Ah,
right?
yes.
So Mayoshi Son, who was like the CEO of this Japanese bank, SoftBank, I think he invested something like 20 to 40 million, something like this, right? In in
Alibaba. It was the
Alibaba.
Amazon of China, basically.
And I think it was 20, and it turned into something like 40 billion. You know,
It's nuts.
I mean, it was,
That's
like,
nuts.
the actual
That
numbers were
is,
like,
yeah, it's nuts.
it was
And actually, SoftBank are one of the biggest investors out there right now as well. If you remember correctly, they invested in WeWork. There's a great show on Apple TV called, I think it's called The Founder or something like that, where it looks at that relationship
yeah.
between WeWork, the founder of
Oh
WeWork,
yeah.
SoftBank.
That's crazy,
That was a
isn't
great
it?
show, yeah.
But to kind of like, so the reason I'm saying that is essentially the payout from VC is really long term, right? But even with Alibaba, with Alibaba's a good one, for example, with Mayoshi Son, that actually happened over quite a long period of time because he invested in it. He IPO'd, and I think it was just even recently.
That they
And I
haven't
think
even sold all their shares in
exactly,
Alibaba.
and very recently they said they were going to sell quite a large amount, right? But it was so the amount they held from that time was just
Yeah,
insane, right?
it's true.
But you still need that. That's what, 30 years or something like that now, if you think about it. So whoever invests in VC, that's kind of closely tied to, I guess, your the fund, like how long it's kind of locked away for, right?
Yeah.
Like the 10-year period you
Mm-hmm.
mentioned.
Mm-hmm.
But then to go back to another point, I feel like we always think VCs, it's all about you make money if you essentially blow up with one or two companies, right? You have an Instagram in your portfolio,
That is the
or
general
that
case,
that
yeah. The fund, they call them a fund returner.
a fund return.
Yeah, like that
That's
one
that
company,
pony, yeah. That's the one that like
the one worldie that really just
screamer, yeah, just
absolute
top
screamer.
bins. That's an IPO basically.
That's an IPO. They make it to
IPO.
IPO. We're talking like all the ones that make it to the mainstream are the unicorns, the worldies, the screamers, the Ubers, the Instagrams.
There's a lot of them. There's deliveries, all of
Yeah,
them.
to be honest, our whole world has the last 10, 20 years has been defined by apps, right? Remember, there was no apps or app store before Apple
But I
and
mean,
the iPhone.
it's not even just. I feel like sometimes even in tech we kind of forget though, right? It's not. I don't think it's just apps though. Even with venture capital, right? It's across the board, right? Like, and I actually just think it's just like, think about something like Nvidia,
Yeah,
which
that's
is
true.
like
Facts.
that's a tech company, right? But like, think about all of the kind of future AI based tech companies that are gonna come out, the infrastructure ones. Think about, green energy right now, right? Like
Yeah,
we're
yes,
all
true.
kind of, there's this like climate transition going on. the US is probably undertaking its biggest kind of spending infrastructure wise since the Second World War, something like that, right? Like I think over a
Inflation
trillion,
Reduction
right?
Act.
Over a trillion, around that figure, I
I
think
think
so.
so, yeah.
Something
They're
stupid, the
talking
amount of
EV
money.
chargers, electrification,
But within that, right,
decarbonization.
within that as well, though, what you're gonna see, right, is a proliferation of startups now, and I see them at work when we cover them, right? Which they're not app based businesses, right? They're technology based
No, no,
businesses
facts, facts,
usually,
facts. I think it's a
and
good point. When I said apps, that's
I think
B2C, and then
yeah,
there's
yeah,
what we're talking about now is actually like B2B, which is funnily enough what my VC invests in. But B2B is huge. What goes on business to business, like
that's
finance, how they send money to each other, how they send documents to each other. For example, DocuSign. It's a
DocuSign,
billion.
yeah.
It's $1 billion company, and all they do
It's
is
true,
you're
it's
able to
true.
send signed documents online, encrypted, and it's all private. But
But it's a
it's a
game
way of
changer. That
legally signing documents online, and
it's a
like,
game changer.
yeah,
Imagine how many days that saves, right? But there is a thing to do with the apps and technology in general of why VC also kind of inherently is so well suited to that business model, right? Because the thing about VC is just the way I think about it is it is still a race, right? It's not
yeah,
the thing about VC is not like let's see a business grow organically.
no,
It,
it's not,
nah,
it's not.
it's
It's pretty much the thing is VCs are also in competition with each other. It's kind of like football clubs trying to scout for like the best up and coming player, and whoever kind of gets that player develops the talent, they can also sell it on for like a nice fee. So with VCs, it's actually quite
there's a
exciting when
bit
it's
of
on
it
the
that's kind of
ground. Yeah,
interesting, right?
literally, that's what
First of
that's
all,
what they're doing. They're chasing They're literally chasing the next founder with the next. Who is the next Mark Zuckerberg? Where can I find
yeah, and they're
him?
always just fighting for this,
They're
right?
literally always fighting, and you tend to find that there are clear winners and there are people that like are what you'd call hot founders. Not in
Yeah,
terms of how they look or anything like that or attractiveness,
yeah,
but
but
the business, their
they got
background,
that touch. They got
they got
that.
that touch. Have they, for example, the AI stuff now?
Yeah,
AI is a
yeah,
hot sector. People are looking for founders and like entrepreneurs that have worked in open AI, that have worked in some of these institutions, or they're looking for researchers that have been researching AI and things like that, and they're just slapping them with money.
yeah.
They're just saying, here you go, build
The
something.
race. No, I mean, it is cutthroat, right? Because I've heard, and I'm sure you've had similar of stories of backstabbings. Just when deals are, like
I've seen it live. I've seen it.
you've
I've
seen
seen the
these
snakiness live.
going and because when you think about the money involved, it makes sense. But with VC, right? So again, it's like a pretty. The thing that's so funny to me is if you look at VCs, the way that they operate, if you look at the way that they do things, right? You think they're like kind of like scientists,
Yeah.
and they're very kind of
Methodological about
yeah. They've got
numbers,
lots of
data
methods,
driven.
but they're
Yeah,
also precise, right?
yeah.
But actually, like when you actually see them, though, they're like quite brute force, kind of just like chucking money, right? If
Yeah.
you look at if you look at companies that, especially a company, let's say that's gearing up to IPO, right? Or not even necessarily about to IPO, but in
Growth
that
stage,
period,
for
right?
example.
In that period when you kind of are about to do something, right? Have to do something. The amount you get is insane. You know, the amount of
Yeah.
money that
So
goes.
let's talk about it. Let's talk about the stage, like, because it's important to talk about like the different stages of growth and where the different investors kind of sit.
Yeah,
Because
let's
you
do
are
it.
right. When companies are about to IPO, they raise $100 million rounds, 200 million. They raise ridiculous amounts
A
of
billion.
money, a billion, even some of them. We've seen that with who's raised a billion. OpenAI, no, not Stripe. Stripe raised like 300 million or
Yeah,
something like that.
no,
But
I'm sure Klarna raised a billion at some point. I'm sure WeWork raised because if you think about the valuation that how do you raise? You can't raise money at $40 billion without it being a
a
billion.
billion. That is
Essentially,
true. That is true. But you got to start from somewhere, right? And the first stage of like funding where VCs can kind of invest is like seed and pre-seed funding. This is where you find a lot of early stage VC funds kind of operate. with check sizes between, $100,000 to 3-4 million. During the pandemic, actually, if you look at the graphs and things like that, you saw that valuations were like at an all-time high. So some seed and pre-seed companies were literally raising rounds of like 5 million, 10 million. And this is them without even like fully building the product and going to market with the kind of product. The valuations have kind of come down a bit now, but you've got seed and pre-seed funding, very, very early stage. The company is usually less than 2 years old. They haven't found product market fit. Then after you get your seed funding, things are starting to get rolling. You go into your Series A, right? And that's where my fund kind of comes in. We're talking about checks between, 5 to 10 to 20 kind of million.
Even more sometimes, right?
Even more so, depending on the company,
it really
right?
depends on where you are, but
It really
all right,
depends.
I had to quickly
Get the
Google this
Google.
one
Go on,
though,
let's
right?
do it. Let's do it.
Talk it because it is so late. There, so essentially, there's a stage between like late stage and early stage, right?
Yeah.
And
Like a Series B kind of thing.
but no, I'm even talking about just in general. Like if you think about it in like two kind of separate, there's like pre-venture funding kind of startup, right? Or like where like the seed and pre-seed,
Yep.
right? Where there are kind of venture funds that operate there
It's
as
mainly
well,
like
but
angels
they're
and just
usually
like
like
loose money. Yeah,
accelerators.
accelerators. That's correct.
They're like angel investors, right? And they help you, as you said, essentially they will help you with ideas. And obviously there are times when this isn't there is exceptions to the rule where if you're like a founder, for instance, this doesn't apply, right? If you've a founder with an exit, usually, right, you probably have an idea, you probably raise a couple of hundred easily. But in general, there's early stage, the pre-venture kind of proper venture money, and then you've got the venture money for a couple of rounds, like Series A, B, maybe C, even sometimes up to D, right? But then you're gonna have within that you have like the later stages, right?
Yeah.
After maybe B, C, right?
Or
I
the
don't know.
big boys.
The big funds. But look at we said $1 billion, right?
Yeah.
Billion raised. So the Epic Games raised $2 billion,
Oh wow. Okay.
right?
That's insane.
That was I think that was early this year, maybe.
Okay.
I'm not
Cool.
sure. That was in. Yeah, I think this is recently actually. This is last year, 2022.
Are
Sorry.
there any other companies?
SpaceX, 1.7 billion.
That one was apparently SpaceX are valued at 100 billion though.
Yeah, SpaceX.
Yeah.
Lineage Logistics,
Okay. Oh wow.
1.7 billion. Anduril, which is defense, 1.5 bill.
Okay.
Fanatics, you know Fanatics?
Yeah, I know
That's
Fanatics.
1.5.
Okay.
So essentially, there's but anyway, to go back to the point, right? You can raise a huge amount of money from venture capital. But when we're talking about the kind of smaller round, right? There is VCs pay out this amount of money, right, to a startup usually, like, and whenever it's like a round that's like, let's say 20, 30, right, you usually have a
20,
lead
30
investor.
what?
Mil.
Yeah, just to let them know,
when
innit?
it's like around like where you raise, let's say 20, 30 mil,
Mm-hmm.
you might have a valuation of, I don't know, like 5x, 10x, sometimes,
Yeah, like
depending,
100.
right?
Yeah.
But at that time, you usually have a lead investor,
Yeah.
and
Exactly.
then you have like a couple of 4 or 5 co-investors, right?
Yeah. So I can even give you an example with
yeah.
Notion, for example. We tend to try to be the lead investor, or you can partner up and you can co-lead with another kind of fund.
Yeah.
So this is where the weird frenemy situation comes in, because sometimes, like, you're friends with some other funds and you're both talking about a deal and you're both very confident and you literally both go in together as partners.
And then
Other time, I mean, that's happened, and the other fund has actually snaked us. It's crazy. So sometimes when you're just like, I'm very bullish on this company,
yeah.
I want to lead the deal by myself. And it's all around the relationship you have with the founder and how you're kind of chatting to them, because I guess they make the decision at the end of the day, right?
Yeah.
They sign the paper, the term sheet that's kind of given to them, and it's kind of like the VC's job to convince them, hey, let me just invest by myself, or let me invest with my friends. Here's the value that we're going to add. Boom, boom, boom. Let's all make our billions.
So yeah, there's two things there, right? There's like, one, you've got to convince the founders that especially if it's a founder, let's say you're not SpaceX, but let's say you're a company or a startup that's like got a big reputation, or
Yeah.
the idea there's a lot of traction behind it, right?
Mm-hmm.
Because sometimes we've seen with some companies where super like early on they
It
already
blows up.
receive
Yeah,
it
yeah,
blow
yeah.
up, right? It blows
Yeah.
up, right? So you're gonna have a lot of people trying to invest in you, and
Mm-hmm.
at that point, one, I feel like, so whether you're a lead investor or not, what determines it too, I think, is it's a bit like in football or
Yeah.
any kind of business or any sports where there's an allocation issue of
Mm-hmm.
resources, right? If there is, let's say, 100 businesses in
Yeah.
your thesis industry that are gonna be $1 billion each
Mm-hmm.
potential wise, right? Not they will reach it, but like
They have
when
the
you assess
potential.
it,
The
right, you
market
have like,
size is there. Like
yeah, and
we
you
know
just
there's a
think
money
these
that.
are, if you're a VC, right, you might not be able to, you're not gonna be able to lead 100 even at the early stage, and even if you have the finances, because the resources to manage that,
Is
it's impossible, right? So also it's like a process of managing. So you have to kind of hedge your bets, right? I guess. But if you're a VC, what are the benefits beyond, let's say, as a lead investor? I assume you might get preferential kind of
access. You can buy
access.
more secondaries.
You can buy so a preferential, I guess, is it gives you voting rights, for instance, maybe
Yeah.
in the
So
future, or is
yeah.
it board
So
seats as
yeah, you get
well?
boards. Okay, cool. So I think the lead investor might be determined by who gets the most shares, equity, right?
Equity,
Once you get a certain amount of equity, you get a board seat.
yeah,
So there's board observers, and then there's actually a board seat.
yeah,
So if you're a lead investor, you're definitely gonna be looking to get a
one
board
hundred
seat, and you'll
percent,
write that into the kind of terms. So
yeah.
you can play a part in helping make the decisions that guide the company in the right direction. You've
That's
put
if
you put
if
in
you have
10
a
mil
board,
into this
right?
company. Like you
Yeah,
want to make sure that they're not just gonna go ahead and just like blow it on some
yeah.
crazy ideas, right? So definitely you get access to the board, you get data. What else you get as a lead investor? You get the PR. People don't talk about that. You get the press. Your name gets mentioned whenever these people are going to the press around, hey, we've just raised like 50 mil.
Do you
Your
get
name gets mentioned.
do you get fees from the startups? Do you, because I feel like you offer services, right? They must.
No, yes and no. So our VC, so the way we operate as a value add venture capital fund.
Yeah,
It's actually a debate within our kind of fund, anyways. But we have a platform team where it's separate from the VC fund itself, and we've got like experts that have sold their businesses, pricing experts that used to work at some of the top consultancies in the world and things like that. And we kind of have operating partners that actually dip into the portfolio companies. So in a way, I guess you can say that they are kind of paying for services, but there's different approaches. Some VCs are like, just take my money and you know what? You know what's best for you. I don't even want to get too involved with what you're doing. Take the money, run with it, do your thing. There's other VC funds like us at Notion where we believe that we can leverage the shared insights and knowledge of the over 150 investments that we've made in the sort of business software space and help guide someone. We don't tell them do this and do that, but we say, hey, from the founders that we've invested in, here's what we've kind of noticed happens at this stage. It seems that to get from 10 million to 50 million in revenue, you might need to hire people with this kind of experience and this and that. It makes it easier essentially. So what we do is we really go in depth in terms of like leveraging the expertise knowledge within our sort of portfolio, but also making sure we distribute that. So obviously I deal with all the marketing stuff. We do loads of articles, webinars, we do
So you
workshops,
yeah, you
resources.
offer like a bunch
We
of
offer,
like
yeah, it's that
services
kind,
to.
yeah. No, but we literally offer a lot of services to. It's literally like a family. We call it the Notion family, and it genuinely. I know it's a bit cringy, but it genuinely is kind of like that.
All right, no, but yeah, okay, fair enough. I think so. I guess with the VC thing, when you've got like the preferential shares, I feel like that also gives you a different set of powers, right? I feel like
Yeah. So when you go to the next round, you
exactly.
can. It's called pro rata.
Hmm.
Pro rata means you can So whenever companies raise more money, they get diluted. And you
Exactly.
kind of lose essentially your ownership stake, or you can get diluted from
Equity.
owning, 10% to, they raise more money, they distribute more shares, and now all of a sudden your shares are like 8% or 7%. With pro rata and being like lead investors, you don't necessarily need to be a lead investor to get pro rata rights, but
Preferential. Yeah.
preferential, you can basically say, I want to put in more money, so I keep my stake at 10% for the
Yeah.
next round, and the next round, and the round after that. So you kind of usually have to have follow-up money as well for that with VCs. So VCs keep a bit of money on the side
Dry
as well.
powder, as
Dry,
it's
they call
called.
it
Dry
dry powder,
powder.
just in case that the company's really blowing up. We don't want to lose our equity stake in it. We keep investing, we keep investing, we keep investing. But that can go both ways. You can
Yeah.
keep investing, and you're just kind of buying the dream of the company, and it ends up not really succeeding in the long run and actually blowing up. And you're just putting money in because you're like, oh, maybe this will save the company, maybe this will save the company. And it doesn't in the end. Or you can keep putting money in, maintaining that equity stake, and the company blows up and you get your due reward.
Um. So it's funny because first of all, I was laughing because I was looking at Stripe the other day, right? Like that's in the industry that I work in, and I just forgotten the news because I've not been like super alert around the kind of fintech industry the last couple of weeks. Um, but we are just talking about Stripe, right? Like first of all, the amount they raised was not 650 million; it's 6.5 billion.
That's wild. That's
um,
certain countries' GDP.
right, it's 6.5 billion is a joke to raise, right? It's uh, that's an invest, and it values them at 50 billion though. But the thing is, that's interesting because Stripe was valued at some
I
point,
saw
I
it was like
think,
100 billion. Oh
90 billion.
yeah,
So it's now lost 50, half, fifty
half of the
percent.
value.
Um, and so that's another interesting thing with VC, right? So you when with the money that goes in, obviously it's not just you invest and then it's up to the founders and the business to go in the way it goes, right? It's VCs can do a lot. Like a VC can oust CEO.
Yep.
We
No, we've
work,
seen that a lot of times. No, we've seen it a lot
we
of
work,
times.
and all of these companies, and that's why you have like things like a board of directors, all of these things.
I've been in the meetings when I've seen like partners discuss, is
Yeah.
this like the right CEO to move us forward, and how do we,
How
do a little
how
switch here?
do we gently
But they're right though. I'm not gonna lie.
usher
They've
in the new
they've
era?
seen thousands of companies. They've got like mad knowledge. That's one thing we don't talk about, is the fact that VCs literally get to analyze thousands and thousands and thousands of companies, but they only invest in like a select few. I think we,
Yeah.
out of 1,000, we might only invest in like one or two or something like that, which is insane. But that's pretty much the game, right?
Yeah, and that's it right there, isn't it? It's like literally, that's the thing with VC is that it's both like super brute force because you kind of once you invest in a company and once they hit some metrics, you're willing to go all in, right?
Facts.
Essentially, right? Like with
Mm-hmm.
this, look at the Stripe one. Most of those investors probably from I don't know with a Stripe from a Series B or a Series C probably because you might not have started investing in that company when it was a million whatever, but you these VCs have been following it
From the
from
big, yeah,
time,
literally.
right? Even if it's got the valuation goes down from 90 billion to 50 billion, they're up if you think about it, because you're still buying in at
When it
really
was.
huge kind of
Mhm.
like premiums, and you've been kind of growing with that. So but the mad thing is it's still precise because 1 out of 1,000 is the like it's an insane kind of ratio.
It is, it is, it is. And I mean, I think that's a good way to kind of like round up this episode on VC and kind of investing. We're definitely going to do more episodes around venture capital. There's a lot of topics that we kind of can go even deeper on. So let us know in the comments whether you liked
Yeah,
it, what more you want to find out about venture capital. Do you want to know more about what founders should do? Do you want to know more about how VCs kind of operate and work? How do you raise your own fund? Let us know
yeah.
in the comments. Blocks to bags. I'm your boy Seb.
Mickey.
Let's go.